Good morning, students. Welcome. I am Arogyaswamy, welcoming you once again for a video on a subject called as Indian Financial System, which is the part of BCom fourth semester syllabus for Karnataka University. In my last video, when it comes to Indian financial system, I have already given you an introduction about the syllabus, what does it include, and how the syllabus is going to help the students, and what are the knowledge that the students obtain after the completion of syllabus. Dear students, to understand better and to know what exactly has been spoken to you very clearly, try to make use of earphones. In this video, I'll be talking to you about half of the first chapter. It means that there will be two videos with regard to chapter 1. This is part 1, and the another video that will be released very soon will be called as part 2. In this first part of the video, I'll be talking to you about what is Indian financial system and how the Indian financial system helps for the economic growth of any country, and I'll talk to you about characteristics, importance and functions of Indian financial system, and I'll speak to you about the components of Indian financial system. When it comes to components, I'll also be talking to you about financial institutions. I'll be talking to you about financial assets. I'll talk to you about financial services, financial market, and lastly I'll be talking to you about money. And this particular part of the first chapter will get end when I make a comparison between money market and capital market. A number of you must be wondering, so what is this Indian financial system? How does it work? And what exactly do we need to focus when we study about the Indian financial system? Before we jump into the concepts of Indian financial system syllabus, I want you to understand the title. Indian financial system has three words. Indian, it means that anything that we are going to study in this particular syllabus will be pertaining to the country India. And financial, the word financial means anything that is related to money. Not only money, anything that can be treated as money, anything that falls under the category of money, or anything that serves the purpose of money can be called as finance. And coming to the last word, system. System is a structure, system is a procedure, system is a method of doing a particular activity. So this particular syllabus will be talking to you about how the Indian financial system operates and what does it include. Before we go to the higher parts of this particular chapter, it is very necessary for us to understand what is financial system. The word financial system simply means the group or the collection or the club of all the institutions which allow the exchange of funds. So now you may ask me a question, sir, what are those institutions that allow the exchange of funds? There are institutions such as banks, insurance companies, stock exchange will allow the exchange of funds. It means that Indian financial system syllabus will speak about these institutions which allow the exchange of funds. This whole syllabus speaks about how the banks operate, how the insurance companies operate, and how the stock exchange operates. To understand the meaning of financial system, you have to understand that collectively in a club or a group of all these financial institutions such as banks, companies, and stock exchange is called as financial system. This financial system does not only exist for a particular country, it also exists globally. When you take all the countries' financial system and bring about the common things in all the financial systems of every country, we come across the global financial system. I mean to say, the financial system exists at a national level and at global level also. Now you may ask me a question, sir. When we speak about financial system, you told about banks, you told about insurance companies, you told about stock exchanges, but there are also people who are dealing with the company money, who are dealing with personal money, who are taking money, who are lending money. Do they come under financial system? Yes, the borrowers, the lenders, the creditors, all these people are coming under the financial system of any country. So when you speak about financial system of any country, to speak furthermore, the financial system includes sets of laws and policies, the rules, the regulations and provisions for the operation of financial institutions and the operations of people who are involved in the financial sector of any country can be called as financial system. By this explanation, you can understand that a financial system includes banks, it includes insurance companies, it includes stock exchange, it includes people such as borrowers, lenders, it also includes the different rules and regulations that derive how these financial people should participate in the financial system. So, when we understand or when we club this whole financial system, you can conclude that financial system is including everything that is related to the finance or money of any country. Financial markets are also hot cakes nowadays. People speak about financial market, financial market, financial market. What can we understand by financial market is financial market, it includes the arrangement of loans. It includes the arrangement of what you call credit. It includes the arrangement of lending of money. It includes the people who want money, who are giving money. So it means that it is having people called as creditors, lenders, and investors. The economic good traded on both the sides in this market is usually some form of money. I mean to say, any of the form or which is having the purpose to serve as money, or anything that gives you the purpose or the activity that usually money gives, come under the parts of a financial system of any country. You may ask me a question, sir. There are people who are dealing with the shares, there are people who are dealing with the debentures, there are people who are dealing with stock and bonds. Do they come under? Yes, definitely. The derivative contracts such as future stock options or future or financial products, they all come under financial system of any country. It means that financial system includes all those people, all the rules and regulation, all those institutions and all those instruments which are tangible or maybe intangible, which can be included in the financial activities of any country, can be called as financial system. Now you may ask me, sir, why should we have the financial system in any country? How does it help? And why financial system has become such a very important topic for us, and why people also speak about financial system nowadays. You can also come across larger amount of channels today, TV channels that speak about finance. There are channels exclusively meant for dealing with the financial aspects of any country. So why it is so much important and what are the characteristic financial system is, very first characteristic or very first important or a function of financial system is that it helps you to issue and it helps you to gather the deposits. I mean to say, when financial system is existing, the people can deposit money, the people can receive money, the people can receive interest, and the banks can give interest, and banks can reinvest them. So when the financial system is not there in any country, so automatically the issue of funds or the receipt of funds cannot exist. So, when there is no issue or when there is no receipt of funds by the people of any country or the companies of any country, you can understand that there can be a larger amount of scarcity of funds. So, these banks include the activity of taking the money from the people who don't use but lend the same money to the people who want to use. Banks work as a bridge between the givers and the receivers. So financial system plays a major role in obtaining the funds if you don't have, and it also acts as a wonderful platform to lend the loan if you are having more. Coming to the next function or important or characteristics of financial system is that it supplies loan from the collected pool of money. So simply, when banks are existing in any country, when financial institutions are existing in a country, they can gather the deposits and give this remaining or extra amount to the people who want them. So they pool the money from the people who want to invest, and they distribute this particular pooled amount to the people who want it. When there are financial systems existing in different parts of the world, it boosts the growth of stock markets. It also boosts the growth of other financial markets. How, sir? See, when the money is collected, when the money is lent, when the money is given to the banks for the further investment, when the money is utilized in terms of stocks, or in terms of bonds, or in terms of any type of derivatives, the activities in the country becomes faster. The people can lend, people can receive, people can invest, people can save, people can also go for the investment of this money in an area where they have not yet explored still. So it means that the financial system, if any country, gives a larger amount of boost for financial activities in the country. So when there are financial activities in the country, there is generation employment, there is generation of what you call utilization, there is generation of consumption. So automatically a country's economic growth also depends on financial system of any country. To give you another important characteristic is it boosts the depth and breadth of finance by increasing the horizon. So what does it mean? Assume I have money with myself, which I don't use it. If I keep it at home, it will remain in a single place. It will not be utilized. It will not be used in a proper way to make it more productive. So when the banks exist, when the insurance companies exist, when there are institutions which are called as financial institutions exist, I can go and deposit that money in those particular financial institutions, and those financial institutions will reinvest or maybe lend to the people who want it. It means that the money gets starting, it starts flowing into the different corners of the country. So the horizon of the operations of the money increases when there is a financial system. The financial system is very, very responsible for capital creation. So what does it mean, capital creation? Capital is usually larger in amount, money is usually smaller in amount. When small people start investing the money in the banks or in the other financial institutions where they can earn interest, the smaller pieces of money come and become a bigger amount. So when the bigger amount is held by someone, it can be called as capital. So you see how the financial system can help a gathering of the small pieces or small parts of the finance into a capital market. So financial system adds a time value to asset and money. Sir, what does it mean? So when the assets and money, when kept deposited, or when they are utilized properly, or when they are lent, or when they are reinvested somewhere, it goes on getting added with the other values. For example, it earns, or it grows, it bulges. It means that the money which is kept at home may not grow in large, or it may not earn any interest, but when you invest the money through the banks or financial institutions, it adds value to itself and money becomes bigger. So financial institutions or financial system of any country will help for the growth of smaller amount of money into bigger. Coming to the next character is that it will help you to set a perfect structure and system in any country. When there are banks existing, when there are insurance companies existing, when there are corporates existing, when there is a stock exchange, when there are what you call the issue of shares, when there is issue of debentures, when there are interest received, when there are deposits done, when the money is lent, you can see that there is a proper structure, and there is a method for receipt, there is a method for giving, and there is a method for investing, there is a method for creation of financial portfolios. So the existence of financial system in any country will create a structure for the economic activities of any country. Assume there is no financial system, assume there is no banking sector, with assume there are no regulations, the money cannot be used in a proper way. So that is why having financial system in any country helps you to have a structure or a system for financial activities of any country. So when the money that is not utilized properly, or the money when it is not invested somewhere, it sits idle. Existence of a financial system will help for the allocation of this idle money to the people who want it. So the money will become active, the money will start earning the other addition to itself. It means that existence of financial system will help you to allocate the unutilized money into the fields where it is actually needed. When there is economic system in any country, it will help for the economic stability of that country. When there is economic stability, it simply means that there are employment, there is earning, the lifestyle of the people is very good, and the standard of living of the people are nice, and people are leading a happy life or contented life. It means that the economic of that particular country is grown properly, and the economy of any country grows well when the financial system of that country is healthy. Coming to maybe the last and important characteristics of financial system is that financial system creates a market that can judge the investment performance. When there are financial system, it means that there are insurance companies, there are stock exchange, there are corporates, there are banks, there are lenders, there are receivers. So when there are banks, lenders, receivers, you can understand how the investment in any country is actually performing. So it becomes very very important for the investment performance to be better in any country only with the existence of financial system. So to sum up about the characteristics or maybe importance or functions of financial system of any country, it will help you to issue and gather deposits. It will help you to supply loan to the people who are in need of. It will boost the growth of stock market and other financial market. It will boost the depth and breadth of finance by increasing its horizon. It is responsible for capital creation, and financial system is also adding value to assets and money. And financial system sets a proper payment structure and system in any country. It allocates the unutilized money into economic resources. It will help for any country to maintain the economic stability and give a standard of living to the people who are living in that country. And coming to last one, it will help you to create markets that can judge the investment performance. Now, I just told you about there are banks involved in it, there are lenders involved in it, there are insurance companies involved in it. To make this generalized information more systematic, we have to understand the components of any financial system. So when it comes to India, because our syllabus is Indian financial system, let us study now what are the components of Indian financial system. Indian financial system has five major components. The first one is financial institution, and the second one is financial assets. The third one is financial services. The fourth one is financial market, and the fifth one is money. Now I will be giving to you some introduction about why these five components are important and how do they perform, what these components actually include. Coming to the first component, that is financial institution, you can call it as banking institution and non-banking institution. The non-banking institution's role is to mediate between the lender and the borrower. It pools the lender's savings and gives it to the person one who wants to borrow it. And of course, there are certain risks involved in taking the money from the saver and lending it to the people who are actually wanting it. But still, it will help for any of the country to grow better. The liability that is for a short duration can be turned into an investment for a longer duration through the help of financial institutions. These financial institutions provide a balance between loan taker and amount depositor. When it comes to financial institutions, there are two types of financial institution. First one is banking institution, or they can also be called as depository institutions, and there are other institutions called as non-banking institutions, which are called as non-depository institutions. Sir, how does these banking institutions or depository institutions work? Their role is to acquire money from public. Their interest are paid on these deposits to the people who have lent money. The lent money is then provided as loan to those who need it, and interests are charged by these institutions from the people who have taken the loan. And the examples for this type of activity is banks, or we can also include some of the credit unions in financial institutions. Coming to next non-banking institutions, they are called as non-depository institutions. Their role is to sell the commercial and financial goods and products to those who visit them. It means that any person, one who is entering a non-banking institution, will be offered with some commercial and financial goods. Maybe when we deal with the components, or when we deal with the documents, or when we deal with the papers that are used in financial system. Papers, I mean currencies. In the financial institution, we'll be knowing more about what is these financial goods and products. These are based on offering insurance, mutual funds, brokerage deals, etc. It means that any institution which doesn't take loan and doesn't give loan but does these financial activities, for example, an insurance company, for example, a mutual fund company, or any company which works on the basis of brokerage, comes under these non-banking institution. It is also called as non-depository institutions. There are further five important categories, out of which three are very very important. They are regulatory and intermediary and non-intermediary. It means that in non-banking institutions or non-depository institutions, we also come across three other important categories called as regulatory. As the name itself says, these are the non-banking institutions that regulate or that provide the rules and regulations for the non-banking institution. Sir, what are those? What are the institutions that will give the regulations to this type of non-banking institution? To give a best example is Reserve Bank of India. To give you another example is IRDA. Sir, what is IRDA? It is Insurance Regulatory and Development Authority. And there is another regulatory institution called as the SEBI, that is Securities and Exchange Board of India. When it comes to intermediaries, these are the institutions that work as a bridge between two different people, one who lends, the other receives, or maybe the person one who is in need of, the person one who is giving the help. Those institutions which provide financial counseling and help by offering loans. For example, PNB, that is Punjab National Bank. It can also be State Bank of India. It can also be Housing Development Finance Corporation. It can be Bank of Baroda, or it can be Axis Bank. It can be Corporation Bank. We call these as intermediaries. Coming to the next category, non-intermediate. These are institutions that help corporate visitors with their finances. For example, NABARD, or Small Industrial Development Bank of India. So this is the first component, financial institution, which includes two things: banking institutions and non-banking institutions. I'll go to the next important component of financial system is financial assets. The objective of this is to provide convenient trade of securities in the commercial and financial markets based on the requirements of those who seek the credit. These are goods or products which are sold in the financial markets. So any product that is sold in the financial market is called as a financial asset. So to give some examples, these financial assets include call money. What is call money? Call money is a money that is lent without any assurance. This is a loan lent for just a day, which is repaid by the next day. The next asset is notice money. Without any assurance, once again, this is a loan lent for more than a day but less than what you call a duration of 14 days. Coming to next one is term money. When the duration of the maturity of a particular amount deposited is more than 14 days, we call it as term money. Coming to the fourth category, treasury bill. With the duration of maturity are less than a year, this belong to the government in bonds or debt security format. These are bought in the form of government treasury bills, which are taken as a loan from the government. The next financial asset in financial asset market can be certificate of deposit. This works on the format of electronic funds that remain deposited in a particular bank for a fixed period of time. And coming to the last financial asset in the financial asset market is commercial paper. It is used by corporate. It is an instrument that is not secured even though for a shorter duration of debt. Coming to the third category, financial services. You can find out the word services clearly mentions that these are the counselings that are given, or these are the helps that are done in the field of finance. The major objective of these financial services is to provide to their visitors regarding the purchase or selling of a property, permitting transactions, dealings, lendings, and investment. These make sure the effectiveness of the investment and arrangement of the funds source also. These are usually taken up by the asset and liability management companies, not so much popular among the normal citizen. Financial services also include like banking services. Banking services include functions performed by a bank, such as a provision of loan, accepting the debits, giving out a credit or debit card, account opening, granting, checkbooks, etc., are the part of these services. The next service is insurance service. These are the services that are provided in the field of insurance, selling the policies, brokerage, and it also includes dealings. Coming to the next financial services, investment service. This service include overlooking and management of investment assets and deposits. The next one is foreign exchange service. It includes a currency exchange, foreign exchanges, and foreign fund transfer. The fourth component of financial market is financial market itself. The market where the trade and exchange of bonds, shares, money, investment, and assets take place between the buyer and purchasers. It happens in financial market. Financial market has four major parts. First one is capital market. Second one is money market. The third one is foreign exchange market, and the fourth one is credit market. What happens in capital market is they deal with the trades and transactions which take place in the market. These take place for a period of only 1 year. There are major three parts once again in what you call capital market, that is corporate securities market, government securities market, and long term loan market. You can easily remember them by corporate securities dealt by companies. The next one is government securities dealt by the government, and long term loans. The second part of financial market is money market. These money markets are short duration investments. They are denominated by the government, banks, and other institutions. This market is based on wholesale debt having a low risk factor with a transparent instrument and format used. There are two main types in money market. First one is organized money market and unorganized money market. In your Indian financial system, majorly will be dealing with organized money market and not so much about unorganized money market. Organized money market has got certain regulations, such as got provisions, which has got an eye by the government, which is looked after, which is instructed by the government, whereas unorganized money market doesn't come under the purview of government. That happens without any much rules and regulations, that may happen in a very haphazard way. Coming to the third part of financial market is foreign exchange market. Highly developed market dealing with several currencies. Foreign exchange market, when you go to the sixth semester, you will study a subject called as foreign market, foreign exchange itself. What happens in foreign exchange market is the currencies of two different countries are exchanged for a particular rate, so we call it as foreign exchange market. So foreign exchange market is, it deals with several currencies belonging to several countries. It is responsible for the foreign fund transfer. It takes place on the basis of foreign currency rates. And coming to the last part of what you call financial market is credit market. This involves both short duration loans and long duration loans. It can be given both individual and to organization. These are granted by several banks nowadays, and financial institutions and non-financial institutions also. And coming to the last and fifth important component of Indian financial system is money. It is very important medium of exchange nowadays. You know, people speak, money is everything nowadays. Money has got a very good liquid capacity. Money can be utilized at any point of time. For example, you have a check or you have a bond. It takes time for you to convert the check or a bond into cash. If it cash can purchase anything at any point of time. That is why cash is called as the most liquid asset. So it is very important medium of exchange nowadays. It is used for the purchase and sale of goods. It can also act as a store of value. You can keep it, you can save it, and when you save it, it may grow when you put it in an investment area. It is uniformly accepted everywhere. Nobody is there in this country today who says no, I don't want money. So money is also a very important component of Indian financial system. To end up this part of this particular chapter or this video, I would like to just give you a small differentiation between money market and capital market. Money market involves dealing with short term loans, whereas capital market involves dealing with long term loans. The next difference is money market associates with assets like treasury bill, commercial papers, bill of exchange, certification of deposits, whereas the capital market deals with shares, debentures, bonds, and government securities. The third difference is that in money market, its participants include commercial banks, NBFS, and chit funds, whereas capital market, its participants are underwriters, mutual funds, individual investors, financial institutions. Coming to the other difference between money market and capital market, RBI is responsible for the working of money market, whereas capital market is responsibility of CB. So it means that RBI rules the money market, whereas CB rules the capital market. To conclude this part of this particular chapter, the above, all the explanations that have been can be summed up as Indian financial system is a group of all the financial institutions that are lending, that are receiving, maybe in a different form and other things. But the Indian financial system encourages people to know more about the economic functions of itself. And the role of Indian financial system is very, very important for the economic growth of any country. So, to conclude this particular video, which is a 50% of the very first chapter of Indian financial system of Karnataka University, I would like to sum up that we have studied in this particular video what is financial system. We studied what are the characteristics, importance, significance, or the functions of Indian financial system. We studied about the components of Indian financial system. The components included financial institution, which is having banking institutions, non-banking institutions. The second one, financial assets. Third one, financial services. Fourth one, financial market. And the fifth one, money. In my next video, I shall be dealing with the other remaining part of very first chapter from the subject Indian financial system of Karnataka University, Dharwad. Thank you so much.